Morning, everybody. It's the 19th of February. We are Sigma Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Morning, guys.
Yeah, good morning.
Wait, Happy Friday.
Happy Friday.
Just had to reach down and grab something. Yeah, you both all right?
Yeah, not bad.
Just having a laugh off fair at Steve's new glasses.
He's not going to show them
now. No.
You rated them.
I've got quite a few pairs. Look,
they are.
There you go. All readers.
No, I'm not going to wear them now. I'm angry now.
Leave them around the house.
I'm upset now.
Steve. Don't be upset. Right, we've finally made it to the end of the week. It's been
Groundhog Day.
Yeah, it has felt like that actually. Not really much stand out in anything that's happened this week in terms of news-wise. Bit of news about the vaccine. The G7 nations are giving a major boost to COVAX, which is a global effort to fund the vaccinations for lower-income countries. UK set to pledge all its surplus vaccines to poorer countries. France committed 5%. I think we're finding out what the US are doing today. So that's good. On the stock front, there was a hearing yesterday for the guys regarding the Wall Street Bets and Robinhood trading platform, basically turbocharging market participants and inexperienced traders. He got a bit of a slap on the wrists for restricting certain names in, from the meme stocks, including the likes of GameStop. Anything else that's standing out for you guys in the news in terms of economic data? We had retail sales out in the UK today.
We've got PMI later, haven't we?
Slumped, as you'd expect.
I think.
We've got a load of PMIs, have we?
About sterling today.
Yeah, it's not off to a great start, is it?
No.
So what was the actual up? Has it finished now? The hearing?
It was yesterday. I don't know if it's finished. He basically said that he had to restrict the trading in all these minor stocks because he had to find 3 million or 3 billion in funds for the exchanges to keep them open or something.
All right, so he had a reason for it.
Yeah, he didn't just. A lot of people thought he was looking after his mates in the hedge funds.
Citadel, Citadel obviously provide the pricing for the stocks, the majority of the pricing.
I think that's what they said.
Is it? I mean, Cameron showed me the deep fucking value guy. Was he interviewed as well?
There was something, because he was basically. I saw him. He didn't look like he was a financial trader, but he had a vast amount of knowledge when it comes to financial trading, and had a history within the industry, and was, I think, told off for sort of misleading people about his how much he knew about the industry. Something like that.
Yeah, so they needed 3 billion for deposits from clearinghouses.
Yeah, so I just think it's it's an absolute disgrace that a trader on Reddit on a platform, can be hauled up in front of an inquiry like that.
Yeah, he's just gone fuck you to the system, and he should be allowed to get away with it, shouldn't he? He's just exposed a flaw in the system, basically.
Yeah, I can understand, having an inquiry into, if there's something gone wrong with the exchange is up to something that they shouldn't be up to, and are trying to protect the guys that problem in particular. I just think, why should that guy have to obviously get a lawyer to put his defense together? So that's cost him a lot of money for a start, and he's made a lot of money, but it's irrelevant. Why should he have to pay for that and then give reasons to justify his innocence?
I
think it's completely wrong. I'm not going to do it now. I'm not going to tell everyone about this stock that I've found. I had a bit of theory this morning. Now you can shoot me down if I ramble on too much about it. So
suddenly our viewing's gone from 6 to 6 million.
I was going to say 6 to 0. So I think obviously the dollar collapses. This is I don't know when it's going to happen. I just think the dollar collapses. The catalyst for the dollar collapsing is obviously really not known yet. Probably some sort of collapse in the banking system, which is long overdue. The dollar collapses, and this is where cryptocurrencies really sort of come alive and step into the world, and everything else that's got a dollar base against it, gold, oil, cryptocurrency, everything just flies. Don't know the timing of it. It would be nice to know the timing of it to the day, but I'll work on it. We'll just we'll watch
start
out
that
for it.
thread now, shall we?
Yeah, I don't think it's a bad thing. If we can get sort of like the Wall Street Bet guys,
Are
to
we a
join
bit
in.
late to join the crypto market, or is this
I don't
just the
think
beginning,
so.
Steve?
Yeah, I don't. Yeah, I've sort of. I mean, I don't know which cryptocurrency is going to be the one. Obviously, we've got Bitcoin is the one everyone knows. Everyone talks about. You've got sort of like the likely suspects behind it: Ethereum, Litecoin. You got Ripple, which is the centralized one, which is really sort of heavily linked to the banks. I think that could have some sort of uplift when the banks start to really sort of take it on board, which they're starting to do. JP Morgan's starting to invest, having that facility for their clients to, if they want to sort of like hold currencies, they're providing that facility now. But they're keeping it very quiet. It's sort of like slipping under the radar a little bit.
I think if you can't trade it, can you? You just got to buy it and hold it, really.
I think so. Yeah. I mean, there's a lot of people trading it, and I was watching it yesterday on one of I think it was on Coinbase, and just you saw what offers were above, what bids were below, and I think trading it is the algos are probably doing it, so it's very, very difficult to trade. I think you can look at it over a period of time and maybe swing trade it. But there's still not enough data to sort of like be super confident. If you look at the weekly chart, it's just the start, isn't it? And you look at any sort of like products, that's how they start. I mean, it's been going since 2014 on here on this exchange, and this is just sort of like natural movement up. So it feels like now we've broken $50,000 and we haven't had a huge reaction here. A couple of thousand points to the upside isn't a huge reaction, is it?
No.
But obviously these sort of things, if the dollar does collapse, which we talked about before when we were sort of like looking at the long term on the dollar, where do I have it? I have it in here, and I think we looked at a weekly chart, didn't we? We had a better one than this, I think. Well, I mean, it was basically this level here. Look at this level here, and potentially breaks this level at 88.40. It's sort of pretty much it's sort of free fall for a little while to around 80 and potentially down to 70. That's, I mean, if you take that as a dollar base and then project it against crypto, I mean, that's a sort of like, another sort of like huge percentage uplift for them. But it would be all the confidence running out of the dollar, and then people would be looking for the next thing to sort of, okay, we can't trust the dollar, maybe the banks are collapsed, we can't trust the banks, what do we use? Cryptos. I don't know. Yeah, silver. Yeah, silver priced against Bitcoin or something. Or they call my son Cameron just said they call Litecoin the new silver. So maybe it's silver against Litecoin.
Well, I was looking at that theta dollar the other day, and that on a 1 minute, it's so volatile. Yeah. On a 1 minute chart, there was I think it was an 8% move on 1 minute.
Yeah,
on a 1 minute candle. On a 1 minute candle, so you can't.
Wow. What's the sort of spread in those sort of things? I mean,
well, that's the thing. I don't know. You got to get.
I mean, it shows you a spread there, or is that just just showing you one price, isn't it?
Yeah.
I mean even in the
that's the monthly chart. It can't quite get over that. I mean, this is only born in May 2018, so it's quite a fledgling one, really. But I mean, look at that; it's just mental.
And all the things that they say about pricing everything against USDT. So at theta will be theta USD and then put a T on the end. And so that's basically tether. So the dollar tether is like, is it 99 cents dollar tether? Is that what it's just sort of stuck at? Or is it, I don't think it moves. It's like.
It's supposed to track US dollar, isn't it?
Yeah. So it's fixed at 99 cents. So change everything to USDT, and the pricing becomes a little bit more understandable and better. You don't get the massive spikes. You see the spikes in the candles. If you put a T on the end of that you've got on the chart, put a T on the end of theta USD, and then the candles should, the candles don't look as spiky. Yeah, so do that with all the cryptos, and it just looks better on the charts as well.
Interesting.
Janet Yellen spoke yesterday, didn't she? I think she mentioned or said that Bitcoin was a speculative or highly speculative asset.
Yeah, it is.
Asked if she wanted to regulate cryptocurrencies such as Bitcoin, Yellen called it a high-risk speculative investment.
Yeah,
didn't do anything to the price, though, did it?
No, exactly, and sort of like you get more and more people say that. The rest of the world's sort of thinking, yeah, okay, so it is. So there's no, if I want to sort of accumulate money, where do I go? Do I go to the stock markets, which are already on the highs? Do I go Bitcoin, cryptocurrency? It is a speculative thing, but it could potentially take over from the dollar. So then Janet won't have a job. So then she'll be sort of coming cap in hand to the Bitcoin gurus.
Yeah, it looks like it's breaking out again to potentially new highs. But yeah, let's have a look at some charts then, guys. What, Ian, you've got the dollar index up there. What's your take on that today?
It's just, we're still in this, aren't we? So we're sort of trying to just, as I said, or keep saying, BC leg is one of the hardest legs to trade. It either normally goes to 38.2 or 88.6, and this one hasn't. It stops around 61.8. So at the moment, it's moving to the downside. If we break here, which is 90.11, then the next stop, or I should say the support level for this Gartley formation is 89.72. So at the moment, sort of buying dips, but I think we should remind ourselves, like Steve said, what the big picture is. And this is the monthly chart. And I think if we buy dips, we potentially just buy dips up to this reverse trend line, which is this big breakout level. And then we get this next impulse move to the downside. I don't know if we're going to get to such lows as here, but sort of even a decent measured move target is down around sort of 81.97. So at the moment, and we can see on this monthly chart, it shows quite well actually. We're nearly, two-thirds through the month. We got a big spike to the downside last month, big spike to the upside this month. So we're just in this volatile corrective formation and trying to play it out. And I think that's why intraday analysis is pretty hard for dollar majors at the moment, because we're in these sort of mid ranges. And yes, you could try and sell it here, which would be nice, but it goes short and then you sort of miss it and chase it, and then sometimes by the time you get on it, it's down to this support level, and then you get turned around and flipped on your back basically. So at the moment it looks bearish, but I'd look at buying dollar dips down around here, 89.72, for the next corrective leg to the upside on a medium term basis anyway. So that reflected onto euro dollar, and we've actually got the fib on here, so 61.8% fib, a sort of a morning doji star, and then moving higher. There's a prime short entry here. So again, as far as I'm concerned, it's in no man's land. I think there's other better currencies to play at the moment than the dollar, and the baskets show that sterling is looking weak at the moment, but we'll get onto that in a moment. So buying dips down here or selling rallies up here, you could potentially try and buy the break, but what sometimes happens is you buy the break, it moves up to 61.8%, and then it moves down to make the CD leg, and then the next leg is only 78.6. But so basically, it's not a very nice place at the moment. Cable, we talked about this yesterday. We talked about the fact that on the daily chart we had an evening doji star formation. And I said I would normally say that's a topping formation, but I sort of said I'd be very careful about playing it, and that's because the confluence area was here at 139.89, and we had this 127.2% extension at 139.84. But again, there's better currencies to play. The dollar is in sort of no man's land as far as I'm concerned. Potentially a wedge formation there on the 1 hour chart, but I think when you look at other sterling crosses, you're better off, if you want to short sterling, doing it against the likes of Euro or Swiss at the moment, I believe. So again, reflection of the dollar Swiss prime support down here. So we got towards the 61.8%. Again, 88.6 was up here. So a break here. And the next support is here. A rally up, and I'd like to sell it. A dip down, I'd like to buy it. Dollar yen's been quite interesting. Started to come off the top. We did have a formation somewhere. We had a 50% pullback on the daily chart. And we've got an alarm on there to highlight that it was one of our resistance levels, but this could quite easily get up to this confluence area here at 106.53. So I'm bearish. I want to get short, but I want to get short higher up. Dollar CAD, I think, is quite interesting. It's not really. I don't know if oil has settled down a bit. I've not been watching it, but this is quite an interesting pattern for a dollar move to the upside. And if we go to a shorter time frame, and this is the 1 hour chart, a potential channel base coming in sort of around the 88.6% pullback level, which is around about 126.52, left shoulder, head, right shoulder, or a potential Gartley at 126.39. So that would basically say stronger dollar, weaker Canadian dollar, and weaker oil. But there's a caveat against that. Looking at all the other Canadian crosses, this is the only one that says that there's potential to sell Canada. The rest are all pretty neutral. Aussie dollar keeps on moving higher. Got two levels here, and they both line up with medium-term charts. So 78.35 or 78.30 is I think it's a 50% pullback level on a monthly chart, and then 78.55 is a 261.8% extension on a daily chart. So again, looking to fade into rallies potentially at both of these levels if you wanted to look at that. I mean, as I was saying, euro sterling yesterday, and again we said yesterday it's probably worth starting to think about fading a move. This was the confluence box that we had. So that's I'm not going to pull it out. 224 extension, 161.8% extension. What happens a lot of the time is we do hit the first extension level, and then we have a little move to the upside, and then it comes down and hits the furthest one. And it was literally pit perfect at 86.41 yesterday. Shorter time frames are looking like it's broken out of a little triangle formation, might just go down and retest. But I think out of all the sterling pairs, this is looking pretty good for sterling weakness. And if you look at sterling Swiss, 261.8% on an hourly chart. If we go to an 8-hour chart, this is a near perfect crab formation. So 224, 161.8%. So that's looking pretty bearish. It's not really jogged on from its resistance level, but like I said, we have got PMI later, and I'm wondering if that will be the catalyst. Yen pairs, as I was saying about dollar yen, there is resistance here. So again, if you look at that confluence area, it touched the top resistance level, which is at 128.42. It did stall there, so it came up, reversed slightly, and then came up to take the furthest resistance level. There are other resistance levels in other time frames up here at 128.66. So again, like the dollar, like dollar yen, I don't know if this is a topping pattern. I wouldn't be surprised if we move up just to get rid of a few soft shorts, if you like, and then cause a bit of divergence, and then move to the downside. But these are looking like they're ready to move pretty soon.
Lovely, thank you. Steve, what are you looking at?
I'm just having a look at commodities this morning. We've interesting little move in oil yesterday, bit of a reversal. We've talked about this long-term, this is a weekly chart, long-term downward trending resistance, and the levels above we're sort of like highlighting around about $65, $66, in between the sort of Fibonacci levels, and this is on the WTI crude oil. Different levels on Brent, but we can sort of see what sort of price action happened yesterday, and got to be a little bit aware of this. It's a bearish outside candle. Last time we had a bearish outside candle way back in mid-Jan, we had a little bit of a correction lower. I think it feels a little bit similar now. We've sort of like we've come off with we've clearly filled this gap from the spike higher at the start of the week.
What's the flag target, Steve? You got a flag on there, haven't you?
Yeah, little flag target. Well, I suppose
it's taken that, isn't it, already? Yeah,
that's there. Yeah, well taken. Well taken. So yeah, it's obviously there's a we've mentioned the sort of like the movement really being affected at the moment by the deep freeze in Texas. That's having an impact on I think it's a 20% drop in output. And the other side of the coin, we're seeing the same side of the coin, we're seeing sort of tensions building around the Middle East as well. Also seeing the OPEC plus nations maybe talking about opening up a little bit of the supply, creating more supply to the market, because obviously the shale producers in the US are now competing with them. So lots going on in oil, and a nice little reversal to sort of finish the week off. If we break it down to the hourly chart, we see we've come through the hourly cloud, got a little bit of resistance up here. Looks like we could have a natural correction would be one wave down, then followed by a second wave down, probably targeting the move down towards 57.14, which would be requires a bit of a decent retest. I think that might be almost supported by the bottom of the Ichimoku cloud here. So last 4 hours it's picked up a bit, but then again sellers are coming in. So a little bit weak to finish off the week.
Lovely.
Looking at gold, we've got a nice flag. I think the potential for that is probably up to about 3,000. This is when the dollar collapses, obviously, guys. So don't sort of 2,650. That's sort of like that flag formation. But there's plenty more different sort of projections we can make with what's gone on before, but that looks like it's in a bearish channel at the moment, gold. So but it managed to take out the previous swing low of 1765, which we've been talking about for a while now. I told you, didn't I? I told you it was going down, didn't I?
Yeah,
so obviously naturally what happens when it gets to this levels, you'll have stops. People will think, right, okay, I'm long of gold. If it breaks the previous swing low, I'll get out. So there's a little bit of a stop flurry here. Doesn't look like a big one. I thought it would be maybe more of reaction, but a lot of the times what happens, it has that little poke its head down, flushes a few weak stops out who've just maybe trading on the intraday or swing trading, who are just sort of like have got quite tight risk reward, and then it has this little rally up.
I like those little swing failures as potential.
Yeah, it does. It's
sort of,
exactly. So for me, 1790 would be a natural target where people start thinking, oh, I've got stopped out, shouldn't be stopped out, so I'll pile back in, get in at 1790, and you're running straight into the clever sellers. and then
some decent divergence on that as well intraday.
Yeah. So it's also looking at this, obviously we saw this trend line break the other day, and we said, right, the next level to watch is this one, and then if we can break that close below the 1765, I think 1670 is a next natural target. 1700 would obviously be psychological support. Silver looks a little bit different to me. It seems to be sort of holding quite well. However, we have now got this. I mean, this is a sort of long-term trade, so don't get too carried away with it. We saw the price fail again at the 50% Fibonacci retracement, which it failed at back in mid-July last year. and it failed again. We obviously had the meme stocks and the follow through from everyone talking about silver being the next GME stock, and that failed, and that left a really bearish looking candle. We've got potential for a double top, but we've got a long way to go. We've got to break 2164. That would leave the measured move down around about the previous swing low, just above there, so around about $13.5, $14. There is potential for that, but that's a sort of like will be the play for 2020. We're sort of like the break of this range would be the next. I think we'll get a big move. I wonder if it'd be like copper's big move. It just keeps going and going and going. We're nearly at $4. Now this chart obviously only has information going back to 2011. So if I go to the copper futures chart, that's much better, isn't it? So we can go back to see where the all-time high is in this contract, $4.65. Are we heading there? Don't know. It sort of feels like it, doesn't
2011?
it? I mean, 2011, yeah. So obviously we've got the double bottom formation. We've spoke about this. Let me get the neckline. The neckline was at 332.
It's gonna be some voodoo shit here, isn't it?
Yeah. And so,
look at that.
There's the measured move target, $4.70. I can't believe we'll get that one, will we? It doesn't seem like far away because copper's just going and going and going. As the economies are opening up and demand increases, copper's a natural resource
moving higher, isn't it?
Yeah, so, yields going up. Sort of,
getting a bit hot, isn't it?
Is it a good main component of chips?
I think it's circuit boards and things like that.
Yes, please.
Every electronic bit of equipment, I think.
Because old Biden was having a few issues with China, when the other day, because they're restricting the export of. He
was trying to go to Taiwan, wasn't he, to get his chips?
He should go down to Mr. Fry down the road. He's got chips, got golden. They are. Yeah, double deep fried. They are brilliant.
Oh.
Now, obviously the thing is, who owns most of the US debt? China?
China.
Maybe. Is there obviously trade war? Be very careful. Leads to something bigger, maybe a bio war. Oh, that's already started. Who knows?
Careful now. Careful.
Who knows?
Okay, gents, fantastic round up of the charts there. Let's have a look at our trades from yesterday.
Hang on, I can see something. Let me have a look at this. Let me put my glasses on with this. Let's talk about this one now. Come on, bring it on.
Yeah. Okay. Right, Steve. Another winner for you yesterday on gold. Just over 1R on that. Ian just under 1R. I had a loser. Not quite stopped out on dollar index, but near as good as being stopped out. So we made a bit of money yesterday.
Stephen, I must be kissing now.
Look at you, are full on French kissing at the moment, both on the same R level.
Wow.
Yeah, so very interesting. Steve moves ahead on gold difference, I think, doesn't he?
Yeah.
On the pip count.
Well, you could say
I don't think the pip count counts.
Not when you're talking about Bitcoin.
Because Steve's always Bitcoining.
Yes.
Mining.
Yeah, so made a little bit yesterday, ticking ever so slightly higher. What have you got today? Who's going to go into the weekend in the lead?
Sterling Swiss, for all the reasons I said earlier. Got confluence areas, Sterling's looking weak, got PMI later, blah, 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 blah. And I've 5 ticks while you've been talking, Joe.
Steve was telling me that he was messaging me probably saying keep them talking.
125.07 stop 125.35 targeting 123.56 5.2R.
Boom. Steve, over to you. What do you got?
Well, my original trade was going to be exactly the same as Ian's, but I'd be entering at a slightly better level.
Yeah, you'll be waffling until it gets up to 10.
Exactly. Yeah, you wait. I'll go after you, Joe.
I've got to try and find something then, haven't I?
No, well, yeah. I mean, I'm going to have to try and find something because I'm sort of. I'll tell you what. I'm going to go with oil. I'm going to sell oil.
Oil,
Schmoil. I could sort of like just try and sort of like negotiate around what Ian's doing, but I'm not.
I know
like
you're just hanging
that.
around now, aren't you? You're going to miss the collapse.
So 52, 208, 4-1. Is that right? Yeah. Okay, so I'm selling oil at 59. Oh, hang on. 55. Yeah, that's right. Yeah, 59.55. The stop is going to be at 60.05, so I've got a 50-cent stop on that, and the target is 57.45 on oil. WTI crude oil. Boom.
I'm not going to say good luck.
I'm looking at Aussie dollar, New Zealand dollar, which isn't the most attractive of markets, but this is a decent uptrend channel. Got a bit of a break back here on, this was yesterday, and in the past few hours we've seen what arguably is a retest of that channel. So I'm going to sell it now at 107.68. Going to put a tight, that's quite tight, isn't it? Yeah, let's just do it. 107.87, targeting a move down here to 107.28. Just looking for 2.16R on that one today. Decent bit of divergence on it as well in recent days. Yeah, let's see what happens. So that's my trade for the day. So we've got a short oil, a short sterling Swiss, and a short of Aussie New Zealand dollar. In terms of data today, as we have discussed, there was quite a lot out in terms of manufacturing PMIs from France, Germany, the Eurozone in general, UK at 9:30, and we've got the US at 2:45. So PMI frenzy today. Anything else, Ian, you've seen?
No.
Okay. That's a long old session. That's 32 minutes today. Hopefully we didn't bore the pants off everybody that's watching.
Longest session I've ever had.
Let's wrap it up there then, gents. Have a great weekend. Hope everybody that's watching has had a decent week, and we'll be back on Monday.
Yeah, cheers.
Have a good one.
Cheers, Em. Bye-bye.